Okay. Welcome to today's meeting, everyone. Today is a great day. We are going to be unveiling. I hope I'm loud. I hope I'm loud and clear. I hope I'm loud and clear. Please let me know if I'm loud and clear. Let me know if you can hear me clearly. You can unmute your microphone or you send the answers in the chats. Let me know if I'm loud and clear. Let me know if you can hear me. Let me know if you can hear me, friends. Somebody should let me know if I'm loud and clear, if you can hear me. Okay. Thank you for the answer. Sam Inc. I see you. Thank you. Okay. Today, just like I said, we are going to be unveiling a very powerful strategy. In continuation to the one that we just learned. We are going to be continuing the strategy that we have learned, the futures trading technique. Okay, the technique remains the same. The way we choose the coin still remains the same, just little additions. But the technique, the strategy itself, there's going to be a little change in the strategy. There's going to be a little change in the strategy. That's in the margin configuration, so that we can take more advantage of the market. And should in case the market is going to go against us, then we are going to be able to scale through. Okay. So I would like to start with the introduction to futures trade. I'd like to start with the introduction with futures trade. I know most of us here knows what we call a futures trade already. Most of us already know what a futures trade is, but I know there are some of us that don't understand what a futures trade is, especially some people that are not here in the meeting. I know some of them, they don't know what a futures trade is. So I'm going to start with introduction to futures trade, because some of them will later watch this video on our YouTube channel, so they should be able to catch up. So futures trade is just as we have the spot trading, where we can trade from the bottom of the market. When the market is down, we can trade and take profits at the top. Right? We can trade and take profit at the top, just like what we have always been known. We have always known, which is for us to trade when a coin is down, and by the time the coin goes up, we take profits. By the time the coin goes up, we take profits. Fine. That is what we do in spot trading. That is what we do in spot trading. Could otherwise be called long trading. What we do in spot trading, we can also call it a long trading, which means to take to pick a coin when the coin is down and expect to take profits by the time the coin goes up. That is what we know as the long trading. So, but on the other hand, in futures, in spot trading, we only trade one side of the market, which is to trade from the bottom to the top. But here in the futures trade, when we say futures trading, you can trade both sides. You can trade both sides of the market. You can trade both sides of the market. That is, when the market is going up, you can trade a coin that is down and expect to take profits when the market goes up. Right? But in the futures trading side, you can trade two sides of the market. That is, when the market is down, and it is going up, you can trade and make profits. And again, when the market is up, a coin that has already pumped up and is already coming down, you can take profits when you can enter the coin when it is up, when it has already pumped, and by the time it falls down, you take profit. That is extremely magical. That is very magical for you to be able to enter a coin when the price is already high, and by the time the coin goes down, you take profits. That is extremely magical, I must say. So this is what we do in futures trade. We trade both sides of the markets. It involves buying and selling. You can buy, you can sell. There is in future trade, we have what we call contracts, which is agreement to buy or sell an asset. So with that, you can be able to leverage. That is when you enter a trade and you're supposed to take 1% profit. royalq has given us a chance to be able to leverage up to 20x, which means when you enter a trade, you expect the trade to go up by 1%, but because you have used a leverage, multiples of 20, because you have used the leverage, multiples of 20, instead of you to take just 1% profit of the asset, you're going to be taking 20%, which means when the coin, when you enter the coin, there's going to be a contract. You enter the coin with $100 first buying amount, but because you have used a leverage of 20x, then the exchange is going to go into a contract with you. They'll borrow you your $100 in 20 places. They'll borrow you your $100 in 20 places, which would be $2,000. So with just $100 first buying amount, you can be able to go in the trade with $2,000 capital. With just a $100 capital, you can be able to go into contracts, and the robots will trade for you as if you are trading with $2,000 capital. I hope you are getting me. That is what we call contract in futures trading and leveraging. That is what we call contract and leveraging in futures trading. Okay. As beneficial futures trading is, it is highly risky. Because in spot trading, when we trade and the coin has gone against you, when the trade has gone against you, in spot trading, you can be able to hold the assets for longer. You can be able to hold the assets for longer. And anytime the coin decides to go up, let's say the coin has gone down for 3 months or 1 year or 2 years, anytime the coin goes back up, you take your profits and exit the market. But it's different in futures trade because you can lose your whole assets. In spot trading, you cannot lose your assets unless it is delisted by the exchange. But here in futures trading, you can lose your whole assets. Futures trading ensures more profits, but it has a very high risk. It has a very high risk. Let me know if you understand that part. Let me know if you understand that part so that we can move further. Okay, great. Let me see how many people understands. I can see some answers in the chat. Okay. I can see some answers in the chat. People are understanding. I see Enoch is understanding. Samuel, Crypto Alex. I see Dr. Farouk. Okay, thank you everyone for understanding. Now we can move further. So now that you have learned what futures trading is, okay, the next thing is to let me tell you how you can stay safe when you're trading futures with your royalq. First off, don't use high leverage. When you're trading with futures on royalq, don't use high leverage. You see, most people, when they hear futures trading, they are all about the leveraging. And the leveraging is not the only benefit of trading futures. Leveraging is never the only benefit of trading futures. The other benefit is that you can trade the other side of the market. Some of us that are already trading futures, we know the enjoyments we are getting from trading the other side of the market, which is shorts. We are really enjoying shorts because when you enter a long trade, that is to enter from the bottom and take profit at the top, the coin could go against you. But it is easier for coins that are pumping to drop back down than for a coin that is high to go up. It is more easier for a coin that is already high to go back down than for a coin that is high, that is down to go up. Think of it like this, right? Think of it like this. You go to the ocean, you go to the ocean in the deep part of the ocean, and then you hold a coin and you throw that coin in the ocean. You throw that coin into the deep ocean where the ocean is deep. As you throw it into the ocean, what do you think will happen to the coin? As you throw the coin into the ocean, what do you think will happen to the coin? What will happen is that the coin will continue to go down. The coin will continue to go down. Why? Because the water is dense, but the coin has weight. The coin has weight. The coin will continue to go down. The most normal and default movement for that coin will be for it to go down. You can't expect to throw a coin in the ocean and say the coin should go up. No, the coin will continue to go down because there are more space down there to go. But there are some times when a coin will go up. I'm telling you for the fact now, take it or leave it, the most normal way for a coin to go is to go down. Some people may not believe this, but this is due to my experience in this crypto space, I have seen that the most normal way for it to go is to go down. So if you are staying on the path of trading shorts, you want to trade when the coin is high and take profit when it goes down, then you'll be getting a lot of benefits because the normal way for a coin is to go down. Now, this coin that is going down in the ocean, everything is fine. It's just going on and on. There will come a time where the whales, where the sharks in the water, they will reach the position of this coin where it has dipped to, and then they will throw it overboard. This coin will go up because the sharks and the whales, they have disturbed the movement of the coin. That is why you see in the news, in crypto news, that a big whale has just bought some certain coins. Then you see that that coin will go up. When the whales come into the coin, it could go up or it could go down. Now, when the whales, when they hit the coin goes up. But I mean, when they hit, HIT, when they hit on the coin goes up. But when they eat, when they EAT, when they eat on the coin, when they eat it like food, then the coin will go down. For example, a coin that is in the ocean and then a shark has came and it has swallowed this coin, would you see the coin again? No, it is gone forever. That's why you see some coins will just go down, they'll just dump like that. They'll keep on going down, they'll never come up again. The sharks has eaten them. But when you see some coins pumping, they are already dipping before, but now they just pump up. Then the sharks has eat on them, they has HIT on them. Or maybe there's a wave that has occurred in that water. Maybe a wave has occurred in that water. There's a strong wave, and it has hit. The wave has come to the to the position of the coin, and it has disrupted the normal movement of the coin, which is to go down, and now the coin starts to go up. I want to ask a question. If there is a wave on the water, there's a wave disturbing everything on the water, is the wave going to stop or not? Is the wave going to stop or not? I'm asking. I'm asking. There's a wave in the water, and then this wave is disturbing all the items in the water. Will the wave stop or it will not stop? Today is Easter Day celebration where Jesus Christ is being celebrated. If you're a Christian, you know about a story where Jesus Christ was on the was on the water, and then he was sleeping in the boat with the disciples are awake, and then there's a wave that started. They were very afraid. They thought the wave would continue going, but Jesus said they should not be afraid, and he told the wave to get silent. I'm trying to say, if there is a wave in the water that is making your coin to pump, sooner or later, that wave will stop and the coin will continue to go down. So this is to let you know that the normal way for a coin to go is to go down. That is why when the coin has gone against you, we say you are in floating loss. Why do they call it floating loss? Because it's in the water. It's in the water now. You're expecting it to go down to do normal as it's supposed to do, but it's doing the abnormal way, which means the coin is now floating. A coin that's supposed to be going down now is coming up. It's only floating. It's only a matter of time it will go back down. Right? I hope you understand my analogy. So it's very normal for a coin that is up to go down than for a coin that is down to go up. So with that being said, it is to prove to you that it is much better to trade short in futures than to trade long. It's not as if you can't trade long, but you can trade long and the market will go against you. But if you trade short and the market has gone against you, sooner or later, the coin will fall and you take your profits. The coin will fall and you will take your profit. So it's better to trade short than to trade long. Now, the next thing for us, we are going to get into how to set up a strategy. I'm going to make sure I just get to those sides. We are going to be focused on how to set up a strategy, but I'm going to touch the sides of how to enter a coin for the people that don't understand it yet. Some people watched our previous video, and I think the recording quality was not so high, so they might not really understand everything we have said in that video. That is why I have to quickly brush up on those areas in this session that we are on. So, okay, I'm going to share my screen. I'm going to share my screen. Hold on, let me join with my other phone. So I can share my screen. Okay. Recording in progress. Okay. I hope my voice is clear because now I'm on air with two phones. I hope my voice is clear. I hope you can hear me clearly. I hope there's no feedback in the voice. Please let me know because we are recording this session. I don't want there to be a low audio quality. I hope my voice is good. Please let me know if my voice is good. Okay, thank you. Thank you. Okay, now I'm going to share my screen. Yeah. Yeah. If you're in Nigeria, I'll advise you to get this VPN, especially if you're using MTN. Please get this VPN. It's going to make your network run smoothly because when you go to your royalq, you will not be able to view your trades properly. But when you're using this VPN, then you'll be able to view it properly, right? So, okay. Okay. Where do we start from? We start from okay. We start from setting up a strategy because it's the main main reason why we are here, or we start from choosing a coin. Okay, let me start from choosing a coin. For those that don't understand yet how to choose a coin, because we have new members in the house. We have new members in the house. There is somebody that just joined the team, I think yesterday, is here. So let me start from, okay. Okay, now, here is your royalq homepage. Right. When you want to trade, from this homepage, you have two options of coins to choose from. But before you choose, if you are new, what to do is to first click on this manage button here. This manage button here. You click on this. After clicking on this, then you click on spot at the top of the screen. It's going to show you all the coins, because each time royalq, your exchange, Binance or Bybit, each time they add a coin to their exchange, the coin will not be automatically added for you. So you always have to come here. You always have to come here on the manage section, and you add those coins manually by yourself. So when you get here, if you are on optional like this, that means you want to remove. If you click on all at the bottom, that means you want to remove everything. But we are not removing. We want to add all the coins that are in your sports wallet. Now, once you click on sports at the top of the screen there, you can see sports at the top of the screen there. You click on sports there. Then the next thing to do is to click on all. You click on all at the bottom of the screen. After clicking on sports, you click on all. My own will not click because I've already added all the coins in my Binance to my royalq, so it will not click. So what you do is to click on all. After clicking on sports at the top, you click on all at the bottom, and then you click on add at the bottom. After doing that, you click on futures again at the top. You click on futures here at the top. And after clicking on futures, you click on all at the bottom. And after clicking on all, you click on add. You click on add. So I've already added all my coins, so it will not click. So after doing that, you have all the coins displaying like this on your homepage. You have all of them displaying like this on your homepage. What you want to do is either you're trading on the spot or on the futures. Right now, we are focusing on the futures trading. We are focusing on the futures trading. So you click on futures here. You can see futures right here. So you click on futures there. After clicking, all the coins that you have added will be showing. All the coins that you have added will be showing. And now that they are showing, the next thing is to click on this 24-hour change. You want to be able to view the coin in group. What group? The group of which coins are doing best in the markets and which coins are doing worst in the market. Which coins are doing best in the market and which coins are doing worst in the market. So if you click on 24-hour change right there, it's going to change the display of the coins. Now you can see that it is now showing the coins as worse as they are. You can see that they are all red on these parts. See, they are red. So I said there are two sides of the market when you're trading in futures. There is the long side and there's the short side. So when you're trading coins that are red like this, that means these coins are on the bottom. They have already fallen down. They are at the long side. When you trade this type of coins, they are called long. What we trade here with the indicator that I am teaching, when we trade coins that are down like this, it is called long. You can use other indicators to trade them on shorts when you have, because the coins move they move rapidly in the space of seconds. They move up, move down, move up. So you can be able to check with other indicators that even these coins, they will go down and you can take profit, but you have to be sure to some certain level of your entry. Okay, but now we are teaching a strategy that is the simplest to use, the simplest technique to use when you're picking coins. So this is what I'm teaching. That is why when you come here to trade these coins that are red, it means you want to do long, which is to enter the coin at the bottom here and then expect to take profits when they go up. You enter the coin at the market at the bottom here, and you expect to take profits by the time they shoot up. That is what we call long. So right here, you'll be able to decide, are you trading long or you are trading short? If you're trading long, you stay right here, you start analyzing from the first coin at the top. And if you're trading short, you click on that 24-hour change up there. You click on 24-hour change up there, and you'll be able to see the coins that are doing well. You'll be able to see the coins that are doing well, and you can start analyzing. So let's assume you want to analyze the coins that are doing bad, which means you want to trade long. You click on it, the first one at the top, which is I. When you click on it, make sure here is on 15 minutes time frame. Make sure this side is on 15 minutes time frame, right? You can see it's on 3 minutes. No, we don't want it to be 3 minutes. We want it to be 15 minutes time frame. So you click on 15 minutes right there. 15 minutes time frame. Now that is on 15 minutes time frame, you scroll down, and then this technical indicator is what we want to check. But before you check, make sure this is on 15 minutes as well. Make sure it is on 15 minutes as well. So you click and you change to 15 minutes. Now that it is on 15 minutes, you want to watch this technical indicator, this meter here. You want to be able to read it. Where is it pointing at? It must be pointing where? Strong sell, right? This cursor at the middle here must be pointing at strong sell and strong sell alone. If it is pointing at something else, then it is not valid. Even if it is pointing at sell, it's not valid. Only strong sell is valid. That is when you want to trade long, right? So now that it is pointing at strong sell, the next thing for you is to check, to scroll down here, and you click on technical indicator. You scroll down here, and you click on technical indicator here. Then you want to check the value. You can see the names. We have 4 different indicators here, which are RSI, stochastic, then KDJ, which is the stochastic K, and then MACD. Those are the 4 indicators, and you can see their value. The first one is 40, then 10, then 19 and 0. So you want to check on the values. Make sure these values, the first 3 values, make sure these first 3 values, they are below 20. Make sure these first 3, they are below 20. That is, this one must be below 20. You can see that this one is below 20. This one is also below 20, but this first one is not below 20. So this signal is not valid. So all these 3 must be below 20. They can be 0, they can be 2, they can be 15, they just must be below 20. It must not be above 20. And once they are below 20, you want to watch this last one, which is the MACD. This last one called MACD. You want to make sure there is a minus on it like this, which means it is negative. So you want to make sure the first 3, they are 20 below, and then this MACD is negative just as it is. Once you see such signal, you go ahead and you create. You go ahead and you what? You create your strategy. You create your strategy. So that is that for when you want to trade long. If you don't understand it, you can come back to the video and you watch, right? After the end of this meeting, I'm going to give you a chance to ask questions if you don't understand something. So now on the other hand, we have short. Short is to trade coins that are already pumping, coins that are already up. Then you trade them and you expect to take profits when they fall down, right? So to get them, you click on this 24-hour change at the top here again. Don't forget, 24-hour change here at the top. You click on it. Very simple. You click on it. Once you click on it, to show you the coins that are up, you can see that the coins are just green. You can see their performance in the past 24 hours. This one has done 93% in the last 24 hours. This one has done 63%, 49%. So you can see It goes on and on. If you scroll down, you see them all. So you want to start from the first one, at the top, which is Magic USDT. You start from the first one, right? Make sure it is on 15 minutes like this. You scroll down to this technical indicator. Make sure it is on 15 minutes as well. Then you want to check this meter. You know, on the long side, this must be pointing at strong sell. But here it is different because this we are trading short. It must be pointing at strong buy, which is indicating that this coin has gotten to the utmost top. You know, it has gotten to the top, you know, of its trend. That is the coin we want to trade. So once you see that it is pointing at strong buy, just like this, it must not be pointing at buy. If it is pointing at buy, is not valid. It is pointing at this, is not valid. So it must only be pointing at strong buy like this. So once you see that it is pointing at strong buy, you scroll down here very simply. You scroll down here on the technical indicator, scroll down here on the technical indicator, and then you click on technical indicator here. Scroll down and click on technical indicator there. Once you get here, you know, in the long, we said this first three must be 20 below, and this must be negative. Here it is different. This must be positive. As you can see now, it is positive. There's no minus on it. Since there's no minus on this MACD, this last one, it is valid. It is positive, which means it is valid. But these first three, they must have their values as well. The first one must be above 80, right? Above 80. As it is on 71 now, it must be above 80. This must be 100. 100. The value you see on it must be 100. If it's going to go down at all, then it should be from 98 upward, right? Nothing less than 98 on this second part. Nothing less than 98. So the first one is 80, 80 above. The second one is 98 above, 98 to 100. 100 is the maximum. And this third one, which is the stochastic K, must be 90 above. 90 above. So 80 above, 100 above on the second one. Then this third one must be 90 above. And this MACD must be positive, just as it is. Very simple. Once you get such signal, you can just send it to me so that I'll approve it. I'll let you know if it is valid. If you are not sure, you can send it to me and I'll check for you. Once it is valid, I send it to all the group. Everybody will trade and make profits. You are the one that give everybody bread for that day. Okay. And if it is I that got a signal, I'll always send to everybody, right? I'll send to everyone. I'll send to the group so that everyone can trade and take profits. So that everyone can trade and take. So you search. You start from the top, from the first one. If you don't get from the first one, you check the second, third, fourth. You can check all the coins and not get any signal. It is okay. If you need a signal, you let me know. Okay, I have team of analyzers that analyzes the market, and you know they'll come out with signals, and then I can send to everybody to trade, right? So that is that for reading the long the short markets. So we have long, we have short. This is short, and the first one we treated was long. So now we are done with picking of coins. I hope you understood that. Let me know if you understood that. Somebody should let me know if you understood that. Farouk, I hope you are here. Mr. Farouk, I hope you are here. Let me know if you understood that, Dr. Farouk, and everyone else. Let me know if you understood that I just explained, so that we can keep on going. Please let me get some answers. Do you understand that? Can I keep on going? Can I go to the next thing? Okay. Am I getting some answers? Okay. 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 Thank you. Business coach AY, I see you. Okay. Thank you. Dr. Farouk, I hope you are getting it. Dr.
Yeah, I'm getting it.
Okay, great. Okay, great. Okay, great. So let's move on to the next thing, which is setting up of your strategy. So now that you have known how to pick a coin, the next thing to know is how do you set up a strategy? Because before you go into a trade, there must be a strategy that the robot is going to use. The robot listens to your instruction. Whatever you instruct the robot to do is what it will do. Okay. So now you want to give your robot instructions on how to trade for you each time you want to enter a trade. What do? You come on your royalq homepage like this, and at the bottom of the screen, just at the bottom of the screen, you click on mine. At the bottom of the screen, you click on mine here. So when you click on mine, you scroll down to the bottom here, and then you see my strategy setting. My strategy setting. That is where you put in your strategy. So you click on my strategy setting, and if you are new, that it's your first time, like Dr. Farouk, when you click on my strategy setting, you're going to see add it now. Can you see? Add it now. It's going to show you add it now like this. So you can click on add it now to add a strategy. And if you are not new, if you have always been here before and you have a strategy, what you see is this page that will list out all the strategies that you have created. And what you do is to tap on the plus sign at the top of the screen to create your strategy. Tap on the plus sign at the top of the screen to create your strategy. Okay. So once you click on the plus sign, it will bring you to this page like this. It will bring you to this page like this. So okay, give me a moment. One moment, please. Okay, one moment, please. Let me please hold on, friends. I'm trying to get something done. Okay, so this new strategy, I think I hint some people about it. This new strategy, your capital, I think it's good to have capital for $200 and above for this new strategy that I'm teaching. You need a capital of $200 and above to be able to trade using this strategy that I'm going to teach now. So if you have $100, you might not be able to use this strategy effectively. Okay, you can just stick to the strategy that we've been using before. But if you have capital that is more than $200, then you can start to use this new strategy that I'm going to teach now. Okay. So your first buying amount is the amount on the remark. Okay, for you that is new, on the remark here, you start from the remark at the top there. So on the remark there, what you put in is here. Just type in futures trade setting. Futures trade setting. Just like that. Futures trade setting. And on this first buying amount, your first buying amount must be 3% of your capital. Okay. Your first buy in amount must not exceed 3% of your capital. So if you are not patient, this strategy might not be the best for you, because sometimes you will enter the market for a person that is trading with $200 and your first buying amount is $6. $6 is the 3% of $200. And then you enter with $6. Because the indicators that we are using, they are so powerful. When you enter the market, they tend to sell very fast. Those that are using our indicators here, they know. You know, the trades sell very fast. Right? Now, when you do that and you have entered with $6 and the trade has sold so fast, then it has only given you the profit percentage on the $6. Let's say you instruct your robot to give you 1.3% profits. Okay. 1.3% profit. Now $6 has gone into the trade as the first buy in amount. And then the coin has gone up to give you profit. And you have set for it to give you a $1.3% profit. So it will be $6 times 1.3%, which will give you $0.07 profit. For a person that is not patient, they don't want such deals. They feel like it's a bad deal. Okay, because they are trading with $200 and now they have entered into a trade and they have gotten $0.07 profit. But I always say something: the knowledge that you get is worth more than your capital. Your knowledge will print more dollars for you more than your capital will ever print. I come again, your knowledge will print more dollars for you more than your capital will ever print. Because when you have knowledge, even if you don't have capital, capital will find you. I always say it is better to be prepared for an opportunity and not have one than to not be prepared for an opportunity and then have it. Okay, when you have knowledge, an opportunity comes, you'll be able to utilize it in the best of ways. But when opportunity comes and there's no knowledge, then you're going to squander all the money, you blow them off. So your knowledge is more important here, more than your capital or your profit. So now, but for a person that has knowledge, that understands what he's doing, he knows that when you have bought, you have entered the market with $6, you are left with, that is at 200 minus 6, you're left with $194 that hasn't entered the market. Now, if this coin drops, the robot will put in more money in the trade. Okay? Now that the coin has already bought $6 before, but if the coin drops, it's not going to put in $6 as the margin call amount. It will put in $12, which means it will multiply 6 by 2, which will be $12. Now, if you add 12 to 6, that is 18. So if the coin goes up from there and it sells to give you profits, that means you're taking profit on $18. So you're taking 1.3% of $18. That is 18 times 1.3%, which is $0.2. It's still small for some people. But when you understand what you're doing, you know how to get into a trade. You don't focus on profit. All you focus on is to win trades. Focus on winning trades more than on profit. Just go one trade after another. By compounding your profits, you're going to see that you have made a lot of profits over time. So if this coin drops again and it buys the third margin, you have 18. Let's assume it didn't go up and sell to give you the $0.2. Now the coin has dropped down and it has bought the third margin, which you buy with $6 in 4 places. It bought 6 times 2. Then now it will buy 6 times 4. Times 4 is equal to 24. 24 plus 18 that is already in the trade before. That is 42. Now, if the coin goes up from that second margin and sell for you, right? From that third margin, is it third? From the second margin. Yeah, second margin. If the coin goes up and it sells, which means you have $48 in the trade, $42 in the trade. That's 42 times 1.3% will give you $0.5 on your trade. The total amount that has gone into that trade is $42, and you have made $0.5. Remember, risk management is very important when trading cryptocurrency. You must not be greedy.
Recording in progress.
Kuna watu ni wapo. Edini. Mambo. Nikupigia naona upatikane. Vipi? Unaendeleaje huko? Unaendeleaje? Unaendeleaje?
I'm still here. Please hold on, friends. I'm here.
Hey,
There's a connection issue on my laptop. Let me reconnect.
Uko nyumbani? Kazini? Uzuri nyumbani tena? Unafungua sasa za nyumbani? Unafungua za nyumbani? Hapo sasa mama aliniambia eti sijui kuna picha walikutumia eti unitumie.
Please close your mic.
Mambo yanaenda. Mbona kabla uko busy uko njiani?
Kindly close your microphone.
Nitumia baadaye, nitakuja baadaye leo. Umeshiba?
Okay, thank you. I've muted that person. I have to join again. Please hold on. Okay, Alex, Crypto Alex, I just made you a co-host. So in case I get thrown out, please help me to hold the Zoom. My network is shaking. I'm trying to connect back on my laptop so I can continue sharing. So please just hold on. Okay. Okay. Now I'm connected. Let me join again. Okay, I'm back here. Can you hear me? Can you hear me? Am I loud and clear?
Yes.
Yes. Okay, thank you. Thank you. Thank you. Let me share my screen again.
In progress.
Okay, please don't forget, if my voice is not clear or something, always let me know. Please always let me know. So, where did I stop? Okay, let me first share my screen. Okay, now I'm sharing. I'm sharing. Okay. Back there. So, I was in the calculator. So, the total amount you have invested in this trade is $42. Remember, risk management is very, very important when trading. You must manage your risk properly. So you don't go in with all your capital. You allow the robot to do its work as it's supposed to do it. So just imagine the robot has gone into this trade with $42 in two places. That is around $84. Then you'd be making 1 point something dollar or more than that on that trade, right? So that is how it works. The robots will not go in. So you don't make profits based on your total capital. You make profit based on the amount that has entered the trade. You make profit based on the amount that has entered into that trade. That is how you make profit. So now, right here on the first buying amount, you want to put 3% of your capital. So if you're trading with $200, your first buying amount should be $6. But your robots will not allow you to put $6 because the minimum amount when you are setting up a strategy from this page is $10, right? Some people, especially if you're using Android, it might allow you to put $5 and above. But if you're using an iPhone, then you only be able to put $10 and above on this page. You only be able to put $10 and above on this page if you're using an iPhone. So here, don't mind that. That is why you see that it is in a red box, because the amount I've used is lower than what is to be used. So you put 10 so that it will accept. You can see now that the box has turned green. So you put 10 there so that it will accept 10 there so that it would accept. Okay. Okay. So, but each time you want to enter into a trade, each time you're about to enter into a trade, you can always change your setting. You can always change your first buying amount. Yes, each time you are about to enter into a trade, what to do is you change your first buy in amount to your desired FBA, whatever you want to use. Like if you're trading with $100, you change it from 10. When you pick it on the coin, you change to 6, which is FBA. Okay.
Yeah, good evening.
Okay. Okay. So on the first buying amount, you put 10. And then this open position doubled. This enable opening double, you don't need it. You leave it off as it is. Right? Enable opening double. It means the $6 that you're entering the trade with, it means that the robots will double it. But we don't want it to double it because we have a focus. There's a reason why we are using 3% of our capital. It is so that when the coin goes against you and the robot starts to buy the dip for you, it will be able to pull your average price closer to your current price so that you can get out of the trade faster than okay. That was my network. My network threw me out. Threw me out. Threw me out. Let me share my screen again. Yeah. Now I'm sharing again. Okay.
Okay. Okay.
Sorry about that. Yeah. Let me connect again. Okay. My screen is visible. Great. Am I loud and clear? Am I loud and clear?
Yeah, sure.
Okay, thank you. Thank you. Okay. Enoch, it was feedback. It was feedback. Sorry, I'm sorry about the feedback. It was a noise feedback from my phone. Okay, but everything is fine now. Everything is fine now. Okay. Okay, so I said here it should be just trade setting. Just trade setting. And on here, okay, this is Android now. So you can be able to put $6 if you're trading with $200. Then you can easily put your $6 if you're using Android. You'll be able to put $6 here if Android is what you're using to. Okay. Okay, so you put $6 there. And on the margin call limit, I said this open position doubled should be switched off. Open position doubled should be switched off. And on the margin call limits, okay, Enoch, this is the strategy that I am sharing. I'm already sharing the strategy now. Okay. The strategy that I said I want to share. This is what I'm sharing right now. Okay. On the margin call limit, you put 20. This is margin call limits here. I hope you can see it. My new member, Mr. Farouk, Dr. Farouk. So this is margin call limits. On this margin call limit, you want to put 20 here. So you put 20 there. And on this old position take profit ratio, you put 1.1. Old position take profit ratio. This one. So this one, you put 1.1. And on this, the next one, which is the old position take profit callback. Okay, the old position take profit ratio, this one is the amount of profit that the robots will come back with. So we want to get out of the trade faster. That is why we use 1.1, because we want to get out of the trade faster. That's why we use 1.1%, right? So this old position take profit callback, sometimes you can tell your robot to give you 1.1%, and then the coin will go up. It will go above this 1.1%. If such happens, what will your robot do? Your robots will it will use this old position take profit callback to check for a pullback from the highest level. You have set for your robot to give you 1.1% profit. But now the coin has gone above 1.1% and it has gotten to 5%. The robot will not sell until the coin comes down by this old position take profit callback, which is 0.3. It is until then that the robot will sell. But because our take profit ratio is small, this one is small, we are only taking 1.1%. So you don't want to let your callback be too much. You want to move out faster. You don't want to waste time. So this old position take profit callback, you change it to 0.01. 0.01. So we have the buying callback as well. When the robot is about to buy the margins. Okay. When you instruct your robot to buy, when the coin has dropped by 2%, and then the coin continues to drop, the robots will not just buy immediately. It will look at this callback, this buying callback. It is until the coin starts to go up by 0.5%, that is when the robots will buy. So we don't want it to waste time as well. We want to buy faster. So on this buying callback, we want to put 0.01 as well. 0.01. And on the last one, which is the sub position take profit callback, sub position take profit callback, you want to put 0.01. That works for the sub margins from the fifth margin downwards. So This strategy period at the bottom here. Oh, it is saved. Let me go back there. This strategy period at the bottom here, you want to make sure it's on one shot. This one. This strategy period. So you click on cycle here. You click on this cycle here. Once you click on it, it will be immediately changed to one shot. So you click on it and it will change to one shot. And after doing that, the next thing is to set the margin configuration. That is, these 20 margin call limits that you have set your margin call limit that if the coin drops, it should buy for you 20 different times before it finishes your money. So you want to set, how do you want the coin how do you want the robot to buy? How many percent do you want the coin to drop on each margin? You have set 20 margin. On each margin, how many percent do you want the coin to drop before your robot buys? And how many multiples do you want it to buy? That is why you come in to this margin configuration here. You click on margin configuration there. So you click on it to take you to this page. So we have 20 margins that we have set. You can see that there are 20. So you want to set them up. This is the default setting by royalq. The default setting by royalq. So we are not using the default setting. We are going to twist it a little bit. We are going to be twisting it a little bit. So right here, royalq says when the coin drops by 3.5%, the robot should put in 2 times of your first buying amount. We have used $6 as the first buying amount. So when the coin drops by 3.5%, you say you enter the coin with $6. And that's when the coin goes up by 1.1%, the robot should sell and give you profits. But the coin did not go up. Now the coin has gone down by 3.5%. You want your robot to put in your first buying amount, which is $6. So you want it to put in that $6 times 2. The meaning of these 2 times, it means $6 times 2. So if you leave it, if you use these settings, the coin will have to be dropping by all these percentage. Right? The coin will have to be dropping by all these percentages. And when it is dropping by all those percentages, the robot will be putting these multiples. So if it drops to this first margin call, it puts in $6 times 2. If it drops the second time by 4%, the robot will put in $2 times 4. If it drops the third time, which is by 4.5%, the robot will put in $6 times 8. It drops 5.2%, the robot puts in $6 times 16. It drops again the fifth margin call by 8%, the robot puts in $6 times 32. That's a lot. So we don't have such capital. That is why we have to come here and set it like we want to. Okay, we come here and we set it like so. Without no further ado, let's go into the setup. The first margin here, you want to put 0.5. So you only want the coin to drop because you want to buy faster. Now you're using a smaller first buying amount. Your first buying amount is small. It's small, which is okay. Thank you, Eric, for that. Thank you, Eric. Eric says he can't hear me clearly. Let me know. How about now? Am I clear? Somebody should tell me. Please don't manage it.
Yeah, you're good.
What did you say?
It's clear over here.
Okay, Dr. Farouk, I'm really clear. Okay. Okay. DKC, I'm clear. Okay. Eric, how about now? Can you hear me now, Eric? Okay, great. Thank you. Thank you. So on this first margin, you want to put 0.5%. So when the coin drops by 0.5%, you want your robot to buy. How many times should it buy? How many times should it buy when it drops by 0.5%? You want it to buy 3 times. 3 more times. So you're pushing more money in there. The robot has started the trade with just $6. Now the coin has dropped by just 0.5%, and the robot has put in 3 times of that $6, which is 6 times 3, which will give us 18. So the robot will put in $18 more. Immediately, your average selling price will reduce. It will give you a chance of getting out of the market faster. And if that doesn't work and the coin drops again, you want it to drop by another 1%, you put 1 here. You put 1 here. And when he wants to buy, he should buy 3 more times. Okay? 3 more times. And on the third margin, if the coin drops by 1.5%, you want the robot to put in as well 3 more times. Okay? And on the fourth margin, if it drops 2%, you want it to put in 3 more times. That's $6 times 3. Okay? And the fifth margin call, you see, this strategy, you're going to need good capital to be able to enjoy it. Trust me. If you have good capital and you stick with the rules, you're going to really enjoy this strategy. You see, on the fifth margin, when the coin drops by 2%, you want the robot to put in 5 times of your first buying amount. That is why we advise you use 3% of your capital, so that by the time it starts this multiplication, your capital will not get tired. So on the sixth margin, when it drops by, okay, on the fifth is 2.5, and on the sixth will be 3%. When it drops by 3%, you want it to put in another 5 times. That's 6 times 5. And when it drops to seventh call, the 7th time, you want it to drop by 3.5. So 3.5 here on the 7th call. And then you want it to buy again 5 times. Okay, so the first 7 margin, you can take a screenshot if you want to. First 7 margins, these are the setup. I saw somebody asked me to drop the strategy code in the group. Okay, I saw it. Somebody said, to drop. Okay, yes, Enoch said I should drop the strategy in the strategy code. Yes, I'm going to drop for you the strategy code. Okay, so on the 8th margin call, when the coin drops by 4%, you want the robot to put in 6 times of your first buying amount. And on the 9th call, when the coin drops by 4.5%, you want the robot to put in 4 times of your first buying amount. The 10th call, it drops by 4.5, now 5%. You want the robot to put in 4 times. It drops the 11th time by 5% again. You want the robot to put in 4 times. Okay. 11th call, drop by 5%. You want the robot to put in 4 times. Then on the 12th call, 5% again, you should put in 4 times. On the 13th call, it drops by 5% again. You want it to put in 4 times. Okay. 14th, you should put in 4 times. 15 is also 5%. You should put in 4 times. You should put in 4 times. Okay, now on the 16th call, you can see now we are on the 15th. You can take a screenshot if you want to. Okay, from the 8th call to the 14th. All right, 8th call to the 15th call. So now on the 16th call, you put 99 because we are trying to block that out. So you put 99 on the 16th call, and on the multiple buying ratio, you put 2. So on the 17th, we continue. You put 4, multiple buying ratio 2. On the 18th, you put 4, multiple buying ratio 2. On the 19th, you put 9.5. On the 19th, you put 9.5. So on the 19th, you put 9.5. The multiple buying ratio will be 2 as well. And on the last one, which is the 20th margin, you put 10. We end it with 10. So the strategy we end on the 20th margin with 10. And on the multiple buying ratio, you put 2. Right. This is the strategy. This is the margin configuration. It is a very powerful strategy. If you use, you're going to get a huge result. Okay. So this is the strategy. After you are done, you can see from the first margin call. So now what you have to do is to calculate. Calculate for you to be able to know what capital that you're going to use. Okay, you have to use your calculator. That is, firstly, you have to calculate how many percentage of drops do you have here. The margin call drops. This one. This one's right here. You have to know how many percent do you have there. So you calculate all of them. All of the margin call drops from the first one. Okay. Okay, I see a message in the chat. Let's see. Okay, this is DK saying I would like to get a video on how to calculate the drops, especially on the ratio. Okay. All right. So on the first call, we have 0.5. You calculate 0. You calculate all these margin call drop. I'm using my calculator now. So 0.5 plus 1 plus 1.5 plus 2 plus 2.5 plus 3 plus 3.5. Okay. Then we keep on going on the 8th call, plus 4 plus 4.5 plus 5. 11th call, 5 again. 12th call, 5 again. 13th call, 5 again. 14th call, plus 5 again. 15th call, plus 5 again. Okay. So you will not calculate the 99, which is the 16th call. So on the from the 1st to the 15th call, we have how many? We have 52.5% drop. On the 1st to the 15th call, we have 52.5% drop. So you have entered a coin and the coin has dropped by 52.5%. You are still buying. So when it gets to the 52.5%, the robot will stop buying because you have 99% on this 16th margin. So we want to be able to come in by then that, oh, why is this coin dropping so much? It has dropped by 52.5% and the robot keeps on buying. What is going on? Then you come in and you check. Just like some people had it in OM coin. You know, OM coin that went down, I think last week or 2 weeks ago. It's a very rare occurrence in the cryptocurrency space for a coin with such market cap to go down that much, went down around 90% within 1 hour. It is very, very abnormal. So in such cases, your robots will only buy 52.5% drop out of that 90%, and you should stop buying for you to come in and do whatever you want to do. So we have 52.5% there. The rest that are down, which are 10 plus 4 and 4, that's 8. That's 18 plus 9.5. That will give us 17.5. 17.5 remaining from this 17th margin to 20th margin. 17.5. So 52.5 plus 17.5. We give us 70% drop, around 70% drop there. So if we say on the 16th margin, you remove the 99 that is there and you put 4, it will give us 74% drop. So 52.5% drop with another 17.5% drop with whatever you like to put when it drops to the 16th margin. But we just know we have 52.5% drop to buy down to the 15th margin. So the next thing we calculate the multiple buying ratios. The multiple buying ratios. So from the 1st to the 15th, we calculate the multiple. That is how many times will your robot multiply your $6, which is your first buying amount. If you're trading with $200, we say you use 2%. Let's see if $200 will work well for this strategy. So to know that if it will work, it is on this multiple buying ratio. You calculate. So the first margin is 3. 3 times plus 3 plus 3 plus 3. Okay. 3 into 4 places, then plus 5 again, plus 5 again on the 7th margin. And on the 8th margin, we have 6. So plus 6. And on the 9th margin, we have 4 plus 4. Then plus 4 again. 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 And plus 4 again. And plus 2. Okay. We stopped from the 15th margin. So from the 1st to the 15th margin, we are having 61 multiples. Hello, somebody. I hope you are understanding this. 61 multiples. So it means you're about to multiply your first buying amount. By the time this coin drops down to the 15%, and it has it is now buying all this 52% drop, 52.5% drop, your robot would have multiplied 6 by 61. So you must be able to buy your first buying amount in 62 places because you add the entry price itself, you add it to it, which is 6. So 6 in 62 places will give us 6 times 62. So 6 times 62, it is giving us $372. Hello, somebody. If you're using $6 as your first buying amount, the capital to trade this strategy effectively is $372, right? So you prepare $372. If you don't have up to, no problem. You can use your $200. Okay? Use your $200. But to be best prepared, prepare with $372 and above. Okay? So if you are trading with $500, this strategy is good for you. You know, you'll be able to trade it using $372, and then you'll be left with 372 minus $500. That is, you'll be left with $128. Yes, 16th call is 99, Eric. 16th call is 99 because we are trying to block it out. We don't want our robot to buy. So for you to use this technical indicator that we are teaching, and a coin should drop by 52%, it is very rare. If I may ask, people that are here, since you have been using this technical indicator, how much has your coin dropped? What has been the depth of the drop? What has been the lowest, the highest drop that you've seen since you've been using this technique? Apart from the OM coin that did what it did, But if you've been using the technique, the new technique, which is to use the technical indicators 20, 20, 20 and MACD negative, if you've been using, how many margins have you bought as the maximum margin that you have bought? Most people have only bought like 3 margins, 4 margins. So the coin has only dropped like 5%, 4%, 3%, 2%. Sometimes it will not drop at all, it will go up and sell. So we are only preparing for all these drops. Most times, your robot will never drop to buy all these margins. If it buys just the first, second, third, fourth, fifth. The fifth margin, and then it goes up and it sells. But you have to be prepared. You don't say because I say it will only buy to the fifth margin and go up and sell, and then you prepare capital to buy to the fifth margin. If you get stopped, it's on you. Don't be greedy. You see, allocate your capitals properly. It is very important. So now that you have set that, you see, now we have 62 times to buy. And from the 16th margin to the 20th margin, that's 1, 2, 3, 4, 5. We have 2% in 5 places. 2% in 5 places. 2% in 5 places. So 10, we have 10 times here. So we add 10 with the 62 that we have gotten before, we give us 72. So 72 multiples. So 6 times 72. 6 times 72 will give us $432. So if you're using $500 to trade, you are safe. You are very safe. Use this strategy. You will print dollars mercilessly. Oh my God. I've tested and I've seen the magic of this strategy. So if you're trading with $500 and above, you will really, really enjoy this strategy. Oh my God. And if your capital is not up to, don't worry. There's no cause for alarm. But on a day that the coin will drop so badly, you might have to wait longer before you sell. It's not as if you will lose, but you just have to wait. Some people will be in and they'll be out of the coin already. They have sold. You are still there because you are not buying more margins. You can't lose, since you have used 3% of your capital and you are not using leverage. So we are done with this. Even if you use $10 as your first buying amount, we have 62 times. If you use $10, 10 times 62, that will give us $620. So 500 and above, this strategy is good. If you don't have up to, no problem. Use your $200, but trade carefully, you see. Trade carefully. Make sure you stick to the rules. Make sure you stick to the rules and have a backup plan in case anytime the coin dips and you need to buy more dip. Okay, this is the strategy. So once you're done setting all this, you click on confirm. The strategy is extremely powerful. So the next thing to click on after you have confirmed, this distributed and take profit allocation. Distributed and take profit allocation. You want to set it up. You want to set it up. So distributed and take profit allocations, you enter into it and you change it, everything to 1. Distributed and take profit allocation. Then you change everything here. You change them to 1. Okay. Change everything to 1. This works for margin call number 5 to 20. You can see it starts from the 5th sub position. So there's what we call sub-in moderate time settlement, which means when the robot buys from the 1st to the 4th margin, number 1 to 4, it will have to sell everything at once. But once it gets to the 5th margin, the robot will be able to sell individually, to sell them one by one. So these are what we are setting. We want it to give us 1% because our whole position take profit is 1.1%. So 1% is okay in the sub positions. So after that is done, you save. You click on save, and your strategy is saved. This is it at the top of the screen. So every time you want to trade, this is the strategy you click on to trade with. Okay, click on the strategy to trade with. So that is that for strategy creation. I hope you have gotten that. We have few minutes left, like 13 minutes before we end the minutes. I think we started late. We started 15 minutes past 5. So we still have, even after, we can still use some more time after 7 p.m. But let's just get to the last part, which is to pick a coin, to pick a trade. Dr. Farouk, I hope you are following me.
Yeah, I'm online.
Okay, thank you. So now to pick a trade, you go to the home page. You go to the home page. Okay. I said you click on 24-hour change to determine where are you trading. It is more advisable to trade the coins that are pumping already. We expect them to go down, so we call it short. So let's click on this first one. And you check 15 minutes, 15 minutes, strong buy, the technical indicator. The first one must be above 80, second one must be above 98, and the third one must be above 90, and the MACD must be positive, just as you have it in positive here. You can see that only the MACD is qualified because it is positive. But this, and this, they are not qualified at all. You can see that they are not qualified at all because this is less than 80, this is less than 100 and than 98, and this is less than 90. So they are not valid. The first one must be above 80 and above. Second one must be 98 and above. Third one must be 90 and above. So let's assume it is qualified for trade. To trade this coin, what you do is after you have moved your fund in your Binance account from the either your funding wallet or your spot wallet, you move it into the futures wallet. After you are sure that your fund is in the futures wallet and you want to trade this coin, remember, is a short signal. Short. Let's believe it is signaling because the coin is already pumped. So let's assume this is 80 above, this is 98 above, and this is 90 above. Okay, and we want to create. So you click on create here at the bottom of the screen. So enter a trade. Either I send a signal or you get a signal by yourself. If you get a signal, you send it to me. Okay, when you send it to me, I'm always online. I see that the signal is valid. I tell you, okay, go ahead. And I send it to all the groups. Everybody will trade. So to trade, you click on create. When a signal is sent, the only thing you need there is the name of the coin and the type of trade. Either it is a futures trade or a spot trade. Most signals I'll be sending now, they will be futures trade signals. Futures trade signals. Most signals that I'll be sending now, they'll be futures trade signals. So, okay, there is something, let me tell you, I have a little twist to this. This first one, because the market is changing direction, okay? This first one, we used to have it as 80 above. Now, let's move up a bit because the market is changing its direction. We are entering bull run so soon. So you can enter coin with 80 above and then the coin will still continue to go up. You expect it to go down, but it continues to shoot up because you have entered at 80 above. Now, make it 85 and above, okay? 85 and above here. 85 and above here. Then this one, let it be 100. And this one be 95 and above, okay? Please take note of this. This is an update to our strategy. 90 above, 95 above here, 100 here, and 85 above at the top. Please take note of that, Mr. Razak. Mr. Razak, please take note of that. Or the one we've been using, I believe it has been serving you very well, but in case the markets will move very faster now. Okay, Mr. Razak is not here. But if those of us that are here, Crypto Alex, please take notes. 85 above, 100, then 95, and Magdi must be positive. So once all those criteria are met, you click on create here. You click on create here. We use Martingale strategy bots. Martingale strategy bots. So it will already be on Martingale strategy bots. You click on create like that. So it takes you to this page. You click on I understand, or you can tell it to not remind you again. It's just a notice. It's not really important. So don't remind me again. I understand. Then you come to this page. If you scroll down like this, you see, okay, sorry. I'm on the sports. Let me go back to futures. Okay. So before you trade, make sure from the home page here, make sure you're on the futures. From the home page here, make sure you see futures here. From the home page, make sure you click on futures here. Okay. You click on futures. Okay. Make sure you are selecting from the futures. So this is the Magic USDT. You click on it like we want to trade Magic USDT. I understand. Okay. So let's assume it is signaling. You click on create. So don't remind me again. I understand. Then here you'll be able to choose. Do you want to trade short or long? Do you want to trade short or long? You'll be able to choose if you want to trade short or long. So right now we are trading short because the coin has already pumped. We are expecting it to go down. So you click on short at the top here. You can see it's on long before. Right here is on long. So what you do is to click on shorts here. Whatever you have clicked on, you're going to see it here. You're going to see it here. Right now it is indicating long. That is the green. It's indicating that you are on long. So when you click on short like this, then you see this place will immediately turn to red, which means you are on short. So we want to trade short. We want to trade short. So you click on short like this. And then if you scroll down, you see that there is no strategy on the coin yet. You can see that we don't have any strategy on the coin. Everything, the first buying amount, everything are just zero. You can see that everything are just zero. So everything are just zero, which means there's no strategy. Which means there's no strategy on it yet. Okay. So you want to click on trade settings to pick up the strategy that we have created. You already have a strategy. You are only picking it up to put it on this coin. So you click on trade setting at the bottom of the screen here. Trade setting here. When you click on trade setting here, to bring you to this page, and then you can see Smart Creates is a default strategy by royalq. We are not using it. So what to do is you click on manually create here. You click on manually create there. And then you click on choose a strategy setting. After clicking on manually create, you click on choose a strategy setting here to choose your strategy. So you click on choose a strategy setting and it will load up all the strategy that you have kept, all the strategy that you have kept in your exchange. So to show up all the strategies that you have set, then you click on your strategy. This is the strategy that we have set right here for our futures trade. You can see futures trade set in here. So what you do is you click on your strategy that you have created. You click on any area on it like this here. On these areas, you can click on any area there. You click on it. Like in there. But before you click, one thing you have to do, before you come to this page, one thing you have to do is to calculate your first buying amount. To get your first, you want to use $6 or $10 or $5 as your first buying amount. What to do is whatever amount you want to use, if it is $6 or $10, if it is $6 that you want to use or $10, you take that $6, then you divide it with this current price. So you go to your calculator and then you say $6 divided by 0.1918. Okay, 0.1918 is equal to 31.28. So when you click on trade setting, manually create and choose a strategy setting, and then you select your strategy and it takes you to this page. The first thing to set is your first buying amount. It gave us 31.2 because here is different from the spot market where you use your USDT amount to enter the trade. Here, you're going to use the quantity of the coin you want to trade to enter the as first buying amount. So here you put 30. Now the result I got was 31.2. You don't mind what is at the point. You just put the figure 31. Just put 31 there. By putting 31 there, it means you are using $6. So 31. If you multiply 31 by the current price of the coin, it will give you 6. So that's the concept. So your first buying amount is 31. There are a few things you must set. This strategy mode here, I was talking about sub-in mode real-time settlements that from the fifth margin, the robot can sell and give you profits even when you are still in the coin. So you click on this, from this strategy mode, you click on the O warehouse mode in the front here. To change the strategy mode, you click on O warehouse mode like this. And then you put it on sub-in mode real-time settlement. This one at the bottom here. Sub-in mode real-time settlement. That is what you want to use. Okay, so you click on sub-in real-time settlement. It has been selected. You can see it has been selected. It has been changed to sub-in real-time settlement. So that is what you want to use to trade. So after that, the next thing to set, after you have set your first buying amount, you have set your sub-in real-time settlement. The next thing and the last thing to set, next and the last, is these leverage multiples. So if you are going to use leverage, don't use, in fact, I recommend for you to not use any leverage. Don't use any leverage. Don't use any leverage at all. Just put it at 1 as it is. But if you want to use leverage, if you understand what leverage is and you feel like you want to use, anything from 2 to 5x is okay. 2 to 5x is okay. Very risky, but it's okay. In a situation whereby, you can see, you say when leverage is set higher than 1x, the risk of liquidation increases. Please be cautious of this risk. So in a case where you are so sure of your signal, nobody's so sure. We just use the indicators to enter in the right way. But let's say we were so sure, you'll be so confident to use the leverage multiples of 20, but it is highly risky because if the coin goes up by 1%, the robots will calculate it that it has gone up by 20% for you. And if the coin goes down by 1%, it will calculate that you have gone down by 20%. So you see, if the coin goes down by 5% on the real, you are already out of the coin. You are already wiped out. with liquidation because you have used 20x. It will multiply 5% by 20, which is 100%. You're already out of the game, especially if you are not trading with margin calls. If you are trading with margin calls, you'll be able to pull your average price closer. Okay. So here you want to put 1 on the leverage multiples, and that is all. Once you have put 1 there like that, you save. You see, all your strategy has been set. Next thing, you save, you confirm. After confirming, you scroll down to confirm that your strategy is there. You see now that your first buying amount is 31. It's not actually 31 USDT because it's futures. It will not buy with 31 USDT. It will buy with 31 pieces of this coin that is sold at 0.1968. So if you multiply 0.1968, which is the current price of the coin, that is the price one piece of this coin is sold. 0.1961 times this first buying amount, which is 31. It will give us 6.07. Can you see? It is your $6. So your first buying amount, you want to use $6, you divide it with this current price. That is the price you put on the first buy. So you can see that everything has been set. The next thing is to click on activate. You can see don't remind me again. Then you click on I understand. And then you click on create bots. Click on create bots to activate the trade. And once you do that, you'll be live in the trade. You'll be live in the trade. And anytime you want to check the trades that you have, after you have started the trade from here, and then you want to check your trades, you go back to the home page. You go back to the home page, and from the bottom of your screen, you click on strategy here. Strategy here. When you click on strategy there, it will take you to this page of your running trade. So if you are on, some people, if you've been trading sports, at the top of the screen here, you will see sports martingale. So if you are seeing sports martingale and you're trading in futures, what you do is you click on that sports martingale at the top there and you change it to futures. You can see sports here. So if it is sports you are trading and you are seeing futures, you change it to sports here. And if it is futures you are trading and you are seeing sports, you change it to futures. So once you change it to futures, you confirm. You confirm, and it will show all the coins that you are trading in futures here. It will show everything here. So that is how to pick a coin. That is how to analyze the market. How to so we have covered what futures trading is. We have covered how to set up a strategy. We have covered, so I've unveiled my new strategy. So we have covered how to pick a coin, how to set up your strategy, and how to manage your coins and all that. So this will be where we end the meeting for today. I hope everyone has learned a lot from this meeting. I hope you have learned. So it will be the end of my sharing. I've completely shared all my information for you today. Now, I would like to see if anybody has a question. If you have a question, you can either unmute your microphone and ask, or you can type in the chat. So I can see a question from Enoch asking, for $40, can I trade futures? Okay, $40 is quite too small to trade futures. Okay, if you want to trade futures with $40, you can't use this new strategy. You can revert to the old strategy that we were using, the old strategy setting that we are using for futures. Okay, this strategy is for people that has a lot of capital. So you can revert to the old strategy that we are using. You can send me a DM if you don't have it yet. I believe you should have it. Or you can check the other videos on our YouTube channel, vceengr, for the previous video that we did. So if you're trading with $40, okay, you don't have what? You mean you don't have the strategy, right? Okay, you have my contact, Enoch. Do you have my contact? Do you have my contact, Enoch? Do you have my WhatsApp line? Okay, great. Then you reach out to me and I'm going to give you the old strategy. I can also configure a new strategy for your $40, right? So it's no problem at all. It's no problem at all. You can be able to trade. Okay. So Crypto Alex, I see you said thank you very much, please, because the live and explanation was so clear. Thank you, thank you, thank you. Okay, okay. Dr. Farouk, you're going to chat me up. Okay. No problem, no problem, no problem, Dr. Farouk. Okay. Thank you so much. Thank you so much. So, okay. So in the next meetings, you should be expecting to see some of my team members. I will not be the only one to be hosting meetings. You see, now I'm building leaders. I'm building leaders. Some of us are now so perfect in trading. I have some team members that are trading with just $100 and they are making $15 profit daily. They are making $10 profit daily. You know, they have perfected this skill so much that they are making a lot of profit with it. Okay, so they have different skills that they have coupled with the ones that I have taught. So, and Crypto Alex is also here. He has a strategy that he is using to pick coins as well, which he told me about. In the coming sessions, I'm going to be giving time. I'm going to be giving chance to all these leaders to share with us their strategy so that we can learn. Even if you're not using all the strategies, just learning it enough will save you sometimes when you need them. Okay. So don't stop learning. Like I always say, don't be focused on profits. This is a lifetime business that you do forever. It's not a business that you just do and you become successful in 2 days, in 5 days. No, you can become successful very fast, but everybody's pace will not be the same. Everybody's journey will not be the same because this is not a return on investment. It is live trading. So that is why we teach. It is live trading. You must be cautious of what you're doing. You must, be aware of your entry points. You must set your risk management perfectly. All these things are so important. That is why we teach. If it is Ponzi scheme, you don't have to learn all this. Just put your money there. It will keep on growing. But sooner or later, they will swindle all your money. They will go with everything. But here in royalq, we are here to stay forever. Dr. Farouk, I congratulate you. This Dr. Farouk is somebody that just joined my team yesterday. Just activated into my team yesterday. So I congratulate you so much. You are welcome. Please know that this is a lifetime business. It's not Ponzi. So this is not going to close down at all. royalq will be here forever and ever. So you learn, learn, learn. Okay, sorry, my network threw me out. My network threw me out. I hope my co-host is here. Okay. Everyone has gone. Okay, so DK Okocha, thank you for staying. Business coach AY, thank you so much for staying. I really appreciate you people for being here. Thank you so much. We have come to the end of the sharing. DK, I hope you are good. Business coach, I hope you guys are good.
Yeah, I'm good. I'm just
Okay.
exhausted for the day. It's
I
okay.
see.
I'll go through it all over again later at night.
Okay, okay, my
Thank you
brother.
so much for your time.
You're welcome, brother. You're welcome. Let's print more money. Let's print more money.
Thank you, boss.
All right. I'm going to end the meeting now so that in few minutes or hours, the recorded version will be on the YouTube channel. I will send the link as usual. Okay. Bye for now. Bye, everyone. Okay. Bye, everyone. I'll end the meeting now.